You good to go? Okay, take that as a yes.
Good morning, everybody. Welcome to the KZN Coastal Red Couch Conversations. My name is Angela Phillip, and I am the KZN Business Development Consultant. Today, we'll be discussing our recently launched Envirocare product. The session will be facilitated a little bit differently to our usual format, in that we'll be discussing some frequently asked questions to equip you as the broker to be comfortable in having similar conversations with your client. Since our Envirocare launch earlier this year, we've had a phenomenal response to the product, which we thank you for. However, this also means a lot of questions around how the policy would trigger in the event of a claim, as well as how our new partnership with our cleanup crew will unfold. With us today, I'm pleased to introduce Warren Bolttler. Warren is an ex-broker with over 25 years experience, and from a broker's perspective, will be facilitating this Red Couch session with Q's and A's, along with our panelists. Over to you, Warren.
Thank you, Ange. Welcome to everybody. It's nice to be chatting to a big group of brokers again. So what I'm going to do is I'm going to ask a series of leading questions, which will help everybody come to terms with or understand a little bit more about the offering. And we will also obviously entertain questions from you guys. But we most of the questions that I ask are going to cover the territory that you guys need to know about. So just before we start, Shelley, would you mind introducing yourself, followed by Rob, just so that everyone knows exactly who you are and what we're dealing with, and then I'll go into an introduction for Doug, and then I'll start the questions.
As Warren said, I'm Shelley Howell. I'm the product champ for environmental liability. I'm the second alcoholic in the group. Rob's the first one. We love gin. We hope one day you guys will join us for a nice iTOO gin. I've been in the industry for many years, in the insurance industry, predominantly as a trucking insurer, moved over to the good side of being a broker and came back to the insurance side again. So yes, been there, done that, got many t-shirts, and yeah, in some circles, I am called the mother trucker. So yes, that's me in a nutshell. Thanks.
Thanks, Charles. Rob?
Yeah, hard act to follow there. No, so I've got slightly less experience than Shelley, but I make up for it with my staggering good looks. I'm Rob Ferguson. I'm the regional head of KZN, and I think the session today I'm really looking forward to. I think it's going to be a good one, considering what our province has been through in the last sort of 18 months. 18 months to 2 years. So yeah, guys, really looking forward to engaging with you guys, and hopefully you can take a lot away from what we discussed today.
And lastly, Doug.
Yeah, thanks, guys. Thanks, Warren. Doug Carmody. I have been in the spill response industry since the mid-90s. In addition, I have been involved in insurance products that did pollution liability insurance, and I'm back cleaning up spills. Yeah.
Thanks, Dougie. Okay, so finally, as Ange said, my name is Warren Bolttler. I'm an ex-broker. Doug and I have partnered with iTOO in relaunching this product, and we've got certain responsibilities in this partnership with iTOO and with Drysit to enhance and deliver this product in a more efficient way to the market. So without further ado, I'm going to put Shelley in the dock first and ask her the question. Shelley, please tell us about the new Envirocare logo and the refreshed product offering.
Thanks, Warren. Yes, so TruckSafe was developed in 2018 along with the TankSafe and SouthSafe product. We just found that it's now time for a refresh. So we started looking at getting a creative logo together. We've never had a logo for the Enviro side of the business. So we went through to our marketing guys. They did a fantastic job of putting together the logo that you see there, Envirocare with the shield. The shield we turned around and chose, we didn't want to go with our competitors with the red. However, we are iTOO, which is red for us. So we came to a happy medium where the green was for the environment, the red was for the hazards and the harshness. We've always turned around and said that iTOO cares for our brokers. It's always been one of our biggest things that we have. And we also care for the environment. That was why we came up with the logo of Envirocare. So along with the Envirocare logo, we also launched a product called Cleanup Guarantee, Guaranteed Cleanup Solution. This solution is a solution for the fuel and bulk hauliers. This we did, some of you came to our launch that we have launched in Joburg and Durban so far. And we did a launch last week in Botswana as well, which was really well received. This was launched in April of 2023. Mandisa, can you not hear me well?
I think you're fine now, Shell.
Yeah.
Okay, great. We found it was a game changer for the industry to turn around and look at the cleanup guarantee, as this is the only first Enviro liability insurance with a contract cleanup partner operating on a flat fee retainer. Doug will tell you a little bit more about how we've gone about that. But our new offering still turns around and covers everything that we covered in the past, plus more. We're now offering spill kits, training, mock spills, and the likes. Thanks, Warren.
Thanks, Shell. So in the logo, you'll notice that this partnership incorporates a company called Drysit, Envirocare, driven by Drysit. Dougie, won't you explain to us in a little bit more detail what the Drysit offering actually is and how it fits into this partnership?
Sure, thanks, Warren. Guys, the reality is that insurers can't, in this very niche space of pollution liability insurance, bearing in mind that cleanup costs make up 95% of claims spend in this pollution liability niche industry, and less than 5% are liability claims. Therefore, an insurer offering pollution liability insurance actually needs a partner to be able to respond nationally and cross-border to any incident that may occur on their fleets that are insured. The Drysit partnership is unique and it's first to market in that we don't have a per claim invoice model, which is like a feast or famine model. We pay Drysit a percentage of the premium which gets paid up front for incidents that may or may not occur that month. And the benefit to this is that Drysit now are encouraged to drive down the cost per claim by choosing the best methodology to respond and clean up that incident, as opposed to choosing methodology that may increase the cost of that incident. And by managing the cost per claim, managing the cost of our claims, we feel, we are confident that we will drive down the cost of insurance premiums in this niche market. So Drysit is seen as an extension of our offering, and are able to offer many other benefits to the insured, from training and consulting, basic frontline spill response training, arranging mock spill exercises that Shelley's alluded to, and many other benefits nationally that assist transporters of dangerous goods to be compliant and to be accident prepared in the event of an emergency. Thank you.
Thanks, Dougie. Okay, Rob, a couple of questions for you, please. And I'll ask 3 questions and you can answer them in one go if you like. The first question is, does an insured need Enviro cover? And if they do need Enviro cover, how much can they take out? What limits can they buy? And finally, we need to address this question around the differences between EIL, or environmental liability cover, and the cover you get for, let's call it pollution in a broad form or general liability policy. So it's quite a long question, and Charles, I'll bring you in afterwards around this risk associated with not being insured properly. But Rob, you're going to get you've got 3 questions in one, if you don't mind. If you need to stop and let me remind you what the questions are, just do.
Will do. Thanks, Sar. I like how I got the triple barrel. You know, it's always a good sign. But yeah, guys, I think, you know, the question being, does the insured need Envirocare? I think any business that's transporting, storing, handling, using and or manufacturing any chemicals, dangerous goods, which are classified into one of the 9 classes of dangerous goods, require some form of environmental liability cover. The chances are your client needs it, and that's where we come in. We can tailor make or provide a bespoke solution that will suit your business, your client's business's needs and risks. The age-old question of any insurance is how much can the insured take out in terms of the policy. So that's very much dependent on the type of commodity and the volume of the commodity being handled by your hauliers or any of your clients' businesses, and that will determine the amount of cover you require. Our options can range from anywhere from 1 million up to 50 million. Although smaller and larger limits are available on request, we just obviously need to refer them to our reinsurers. But generally, we can handle anything up to 1 to 50 million. And then a question we get asked often by brokers and clients alike is the difference between the sort of traditional pollution extension that you get on your multi-mark policy versus an EIL, environmental impairment policy. So from a general insurance perspective, many businesses have tended to rely upon limited pollution cover provided by a general liability or property policies to manage the environmental risks. It's very important to note, however, the limitations of the environmental cover within these general forms of insurance. Namely, I can go through a list of about 10 different differences between what's covered and what's not, and maybe I'll just point out what's not covered by your general multi-mark policy or general liability, so to speak, broad form liability. So liabilities arising out of gradual pollution aren't covered on your multi-mark or broad form. Damages payable to third parties for sudden and accidental pollution events. Sometimes this can be covered. However, it won't cover you from a first party point of view. That would be covered on both first and third party from an EIL policy. Your statutory and regulatory requirements for cleanup of your own site, that's not covered under a broad form or a multi-mark policy. Damages payable to third parties for nuisance pollution risks. So that's not covered from a sudden and accidental point of view under your multi-mark policies. Cover for liabilities arising from historic contamination. So that's certainly not covered. And under an EIL policy, this can be looked at and covered under the right circumstances and proper underwriting. Emergency costs certainly aren't covered under your broad form policy or multi-mark policy, which it is on an EIL. First party business interruption. It's an optional extra that we can provide for you guys, which I think can be very impactful when it comes to a loss that derails the business or your client's business. And then cover for liabilities introduced by the new environmental laws from the EU, which South Africa are starting to follow. This is what our policies are based around, and it's sort of the benchmark that we are looking to base our products off. So yeah, guys, there's some easy sort of easy to see differences between a general liability on a multi-mark policy versus a bespoke EIL policy. one thing to remember is, typical property insurance would only respond to pollution when it was caused by an insured property peril, such as, fire or flood, or and that would only respond to the costs of reinstatement or indemnification, of the owned tangible property. For example, the buildings, machinery, and plant or stock. That doesn't respond to the soil and the groundwater underneath. So there's very little overlap between a sort of traditional property multi-mark policy and an environmental insurance. Well, how did I do?
You did fantastically, Rob. Well done. I had my doubts. Okay. So obviously there are a number of positive reasons, or let's call it economic or commercially viable reasons why an insured would need this cover. But Shell, can you give us some of the reasons why an insured would need it from a legislation point of view? What are the risks to an insured for not having enough of this cover or any of this cover?
Absolutely. Our constitution turns around already and says in it that we've got a duty. But our NEMA Environmental Management Act 107 of 1998 says that you have an overarching duty of care to make sure that the environment is looked after. We have turned around and seen a few where they have turned around and imposed some stuff on it, but we do know that a person convicted of an offence in terms of NEMA can be liable to pay fines of up to 10 million or in instances imprisonment for a period of up to 10 years. Over and above that, I think the biggest part of that a client needs to turn around and look at is their reputational risk. If you are underinsured and you don't clean it up correctly, there is a massive reputational risk. We've seen that with USP down in Durban with the floods down there. They didn't have any cover in place, and they contaminated the whole waterfront in KZN, all the way down into all the tributaries, and there was a lot of ecological and rehabilitation that needs to happen there. So yes, in terms of legislation, NEMA will definitely turn around and find you. And if they don't, the green scorpions are going to find you. All of them are going to turn around. Any environmental lobbyist is going to turn around and find you. So I think as much as what the act is an issue, your reputational risk is just as good.
Thanks, Shell. So we've sort of discussed the overall insurance and risk environment as well as the legislative environment. Maybe we should get into the product a little itself, Envirocare policy. What actually is an insured covered for under one of these policies, in particular ours?
Awesome. So a policy would be triggered by a spill, and it would not necessarily have to be a peril as in on a motor policy where there's been a physical accident. It could be there's a spillage of a side tank cover. There may be a gradual spill across from a shift in goods, any of that stuff that happens. So spillages that would be covered is on the road. If you have a depot and you've taken side cover out, spillages would be covered in terms of the depot. Spillages would be covered during unloading and offloading. So if you're busy offloading from your truck, you have a dedicated forklift that goes with it. Your forklift turns around, lifts up your palletized stuff. Unfortunately, the load shifts, it spills all over the floor. That is covered in terms of the policy. Even though it's not, our policy would turn around and say it's goods on the road, it does turn around and extend to offloading. We also cover the vehicles if they're stationary for up to 72 hours. We do know depots, you sit for hours and hours waiting at warehousings to either pick up goods or leave site. So in those instances, we would turn around and cover if there is any leakage of either the side tank cover of the vehicle, hydraulics on the vehicle, or any of the goods that are being carried on that vehicle, up to a maximum of 72 hours. We offer harbor spills within harbors and ports. If your client is doing bunkering, this cover can be offered at additional costs. On the smaller guys, on the cleanup guarantee solution, we offer a limit of R1 million for harbor or port cleanups. We do know that this is one of Dry's famous. They love doing harbour and port cleanups. We don't like it as much because there are additional costs that come into these kind of spills. But the legislation turns around now also and says that if anybody is offloading or unloading at a port, they need to turn around and have booming around the ship anyway. So it does turn around and at least alleviate some of that contamination spreading further with the boomings. We cover our normal side tank cover in the event of a spill. We've seen a few instances where guys have fallen asleep and they've lost control, either hit the pavement, which is perforated the fuel tank, and there's a slight spill of some of the diesel there. In one or two of the incidents lately, we've had a few of the political unrest. We had one 2 weeks ago where one of the transporters was driving into an area. Unfortunately, they had municipal disruptions, and he was shot at. He realized as he was driving in, look, there's problems here. He did a U-turn. But as he was driving away, they shot it at his door of his vehicle, and it also hit his side tank. Thank heavens for us, and the nicety of the gent that was transporting all the goods stopped on the side of the road, took a piece of his soap, and actually plugged the tank for us so that the spill didn't turn around and go any further. And then, of course, we have our third-party liability cover in terms of the policy. This will cover you, the third party, for cleanups of the spill, either emergency and cleanups, rehabilitation of the land, any property damage, as well as body injury. So that in a nutshell is what we cover in terms of our current policy offering.
Thank you, Shells. I just want to pick up on one or two of those things. You mentioned side tank cover for the vehicle's own fuel tank. It is obviously included in the policy, but can an insured buy side tank cover as a standalone solution only?
Yes, they can. So we do find requests for this if the client carries non-haz goods. They do turn around and take out standalone side tank cover. This is up to a maximum of 250,000 Rand, and it does turn around and cover him for the fuel, any fuel that turns around and is leaked out of the fuel tank, as well as anything that's got to do with the vehicle, any hydraulic oils, engine oils, anything like that can spill from the physical asset itself. So
Okay,
yes.
so it's not just for the spill of the cargo. And
Nope.
and on the same topic, obviously the product is designed for hazardous chemical or hazardous liquid bulk, but would the cover also apply to carriers carrying non-hazardous goods, either liquid or solid?
Yes, so we do have what we call a dry non-haz solution that we can offer to transporters. And we do believe that every transporter that's out there that believes that they're carrying non-haz goods, most of them are general transporters. So they will turn around and get a load that they need to go and collect. They're not really sure exactly what is in the load. There is a chance that there could be a pallet of paint, pallet of thinners, any of that stuff with their dry and non-haz that could be in that load. And that'll be the one instance where there will be a shift in that load or there will be an accident. So we do believe that they should have that. So yes, we do offer that. It is at a less premium than your normal classes of your hazardous goods, but it is something that we can offer.
Thanks, Shelley. What about, you mentioned right and strike. So most asset classes of insurance are able to have Sasria cover appended to them for the asset. Seeing as though this is a liability policy, how do we deal with incidents caused in a political unrest or a strike situation?
So we found when there were the riots and strikes down in Durban that Sasria turned around and responded to claims for the physical asset as well as any of the goods that were transported on there. There was a little small subsection of debris removal that they could get on the extension. However, the physical cleanup of the hazardous goods that were spilt on the surface, as well as any rehabilitation of the environment around it, was not covered in terms of Sasria. So we saw a gap in the market and we came up with the passive riot and strike cover. This cover is not linked to Sasria at all. It is a premium and risk that we take net on our treaty. and it is offered per vehicle.
Thanks, Shelley. It's good to know. Finally, are there territorial limits? Where does this cover apply? Especially, let's use an example of a South African owned or South African domiciled fleet. Where does this cover apply in Africa?
So our territorial limits are Africa, south of the equator. So anything south of the equator, we're happy to turn around and do. DRC, we can do up to Kawetsi and Lubumbashi, and that's it, yeah. We also, while we're talking about territorial limits, we do have iTOO offices in Africa, and we do offer environmental liability through our iTOO offices in Africa. As I mentioned earlier on, we've just gone up and done a launch in Botswana, and we're happy to turn around and look at those covers. The only request that we have is if you want to turn around and place business into iTOO in Africa, you need to have a friendly broker in country in order to turn around and do those policies.
Thanks, Shell. Rob, with this thing called a broker, a sort of a record of advice that brokers are struggling with on a daily basis, what should the brokers be asking clients when looking to talk about environmental cover for them, and how can they record this in their record of advice? Unmute.
Robbie, unmute.
Sorry, I think someone put me on mute. But I think you know, a great place to start in terms of you know, brokers advising their clients is to, you know, the first question I would be asking my clients is, do they actually know what their potential liability is around a spill or some form of pollution? And I think certainly with the hauliers, you know, every time their trucks or LDVs, you know, regardless of what they're carrying, you know, leave the insured premises, just due to the mere fact that these vehicles are carrying fuel in their fuel tanks and then on their side tanks, you know, they are at risk for some form of liability. I think, you know, while the cleanup costs of these types of side tanks claims may not be as high up and expensive as the cleanup of the goods being carried, our stats in the claims department show that these claims are becoming more and more frequent and therefore more severe as well. So I think a good place to start when you're looking at this with your clients is to start with the side tank. It's a good foot in the door, and then we can start looking at the actual items that they're hauling around and carrying. So I think it's really just it's getting to know your client's business and how and what they are moving around, and then we can step in and help guide the client in terms of the best cover at the most affordable cost for them.
Thanks, Rob. Back to you, Shelley. Are we seeing any trends in the industry at the moment in this space?
Yes, so I'm going to first talk to the KZN market. So KZN won't have seen some of the trends that we've seen up in Joburg and in Cape Town, in that because of their strikes and that they were sort of allowed to have a little bit of a grace period when it came to load shedding, which I know they have now lifted that grace period up. So opportunities that have come up and trends that are happening in the Johannesburg market specifically, where we've seen a lot of exposure and a lot of requests, is on the truck safe side. Due to load shedding, guys are having to turn around and house generators in their basements of their businesses in order to continue operation. These generators, of course, need to be filled with fuel, diesel, on a regular basis. And there has been a market now where there are guys that are supplying diesel to offices and homes for diesel for their generators. Most of these deliveries are being done via LDVs, either with a flow bin with a pump on the back of the LDV, or they are towing diesel bowsers to the different sites. So we have seen an absolute increase in requests for Enviro cover for these types of risks. We do turn around and insure LDVs along with our HCVs. We do turn around and do diesel Bowsers, and we can absolutely do flow bins on the back of an LDV. So this is the one trend that we have turned around and seen in the market. And then on our tank safe side, we've seen a trend in that in past, it wasn't a requirement to have environmental cover in place for your fuel stations. However, now when you turn around and apply for the license, attached to the license documentation that you need to submit, you need to have proof that you have an environmental liability cover in place. We offer what we call a blanket pre-phase construction policy for that'll assist with the submission for your fuel license. This turns around and covers you for while you're busy with the construction up to the first time that you fill that tank. The minute that you fill that tank with the first load of fuel, that the policy then needs to be transferred to a full cover environmental tank safe policy. We've also noticed that whilst, when we've seen it in 2 or 3 at the moment, either when they are selling their fuel stations or whether they're changing their name, the ownership name, they're now also being asked for confirmation of environmental liability. So we're having a lot of those coming through now saying, please, we can't continue with our name change unless we have environmental liability in place. So we're seeing those kind of trends coming through as well. Thanks, Warren.
Thanks, Shell. You mentioned this trend of caused by load shedding of more and more small businesses and even households transporting diesel to and from their own generators and that. Has that translated into requests for cover from that sector of the market? How do we sort of enlighten the insured people out there that this is a need?
So surprisingly, we have not seen this risk, and we do believe we should have seen this risk by now, and requests to turn around and look at insuring these type of risks. But unfortunately, at this stage, we're not. So I do feel that it's a risk that the broker should be discussing with their clients when they do their needs analysis. And especially if the insured is a tenant of a building, they will turn around, their contract will turn around and say that they need to have the site back in the position it was prior to occupying the site. So we know there will be, unfortunately, diesel spills. There will be residue that's left behind when they're doing dispatching of the fuel into the tank or into the generator. So we do believe even if it's limited cover, they should be looking at some kind of cleanup cover for the generators that are in the basements of these buildings.
Thanks, Shell. I might go off piste a little bit here, and maybe Doug, something that I've heard you talk about in the past is the storage of fuel. It's not for everyone. You need to have appropriate controls in place. You need to be accredited. You need to have all those sort of controls in order to store fuel. And now with everyone having a diesel generator on site, there's ad hoc and possibly illegal storage of fuel going on. Can you just give us a sense of what the rules are around the storage of fuel and hazardous substances, and what accreditations you need, and why it makes this product even more important for those SMEs you are storing fuel for their generators?
Yeah, thanks, Warren. So if you've got more than 210-liter drum of fuel or chemicals, let's say in the example of backup diesel for a generator, you need that drum has to be stored in such a manner that it's got a containment bund around it for the entire contents of that drum, so that nothing goes into the environment or stormwater drains. Therefore, probably 99% of people storing drums of diesel at their premises, factories, depots, properties are all illegal. And you have to have a spill response plan drawn out in the event of a spillage if you've got more than 210 liters of dangerous goods on site. If you're transporting dangerous goods on site, you do have to have an accident management plan, a service level agreement with a spill company or insurance in place in the event that a spillage does occur. Remember that a 100-liter spill of diesel, let's say from a side tank even, on a road in drizzly conditions can cause secondary accidents that could be fatal. So there's a lot of risk associated with dangerous goods, even in small quantities.
Thanks, Doug.
Yeah.
That's good. Yeah, I mean, you know, generally this kind of product in the past is designed for people qualified to carry hazardous goods, but the situation in South Africa at the moment has created an environment in which normal non-hazardous goods carrying businesses are now storing and carrying these goods, and it's an important conversation to have with your client as a broker. Okay, Shelley,
Warren, can I just add in there quickly?
Yeah.
So in terms of NEMA, Section 30 turns around and says that if there's more than 200 litres of hydrocarbons that are spilt, it actually should be reported through to Environmental Affairs. Unfortunately, we can't turn around and do it for every claim because they would be inundated with that. So it is something that we would have to turn around and look at as well, and they need to be aware, clients need to be aware. 200 litres actually in terms of the Act is a NEMA Section 30 reporting offence.
Thank you, Shell. Okay, some questions we've received in the past around the policy structure and the policy indemnification is the difference between the operational cleanup rehabilitation costs and the third-party liability piece. So Shell, maybe we can just talk a little bit about the liability section of this cover. Starting with, if the insured requires higher third-party limits on the environmental policy, are we able to offer this?
So what we used to do in the past is on our policy schedule, it would say as per limit of indemnity. But we've had some discussions with some brokers who've turned around and said, in terms of getting increased excess of loss cover on their policies, they need an attachment point. So we have re-looked at that, and we have turned around now on all our renewals, as we're going through our renewals or any endorsements that we're starting to do, is put the limit of indemnity. So our base attachment point is 2.5 million. The client can turn around and buy up additional cover on the liability, but we would turn around and prefer that the broker outsource XL cover after our attachment point on our policy.
Okay, so I mean, we obviously have a limit of indemnity on the policy, which is there for both the cleanup and the limit and the liability limit, and it certainly helps if we can stipulate how those are apportioned so that the attachment point can. Okay, thank you for that.
Absolutely, yeah, because some of the brokers were saying, okay, well, at the moment you turn around saying 5-month limits of indemnity, but your policy is going to respond to first party cleanup first, and then it's going to turn around and respond to third party cleanup, and then rehabilitation and everything else that goes with it. So their concern was that what happens if the attachment point is not sufficient, because they've already used up of their 5 million, they've used 4 million on cleanup and rehabilitation. They've only got 1 million left for the third-party liability portion side of it. So that's where we've turned around and said we'll put in a specific attachment point on the liability section, and then is for the broker if the client wants additional to turn around and source outside XL cover.
Thanks, Shells. Can we offer contingent liability for environmental liability? And when you answer that, can you also touch on our stance or particular position on exclusions? You know, when is something not covered under this policy?
Okay, so our policy turns around. When we do rate our policy, we rate it on specified vehicles, unspecified vehicles, and subcontractor vehicles. With subcontractor vehicles, we do normally turn around and note the contractors in the policy, so that we know where the insurable interest sits. We are happy to turn around and look at contingent liability. We've had 1 or 2 requests recently, and we offer this as a sleep easy option in the event of a subcontractor unwillfully defaulting on their insurance cover. We would turn around then and ask that we want confirmation of the subcontractor's environmental liability policy, so a confirmation of cover. And then this cover would then respond if the subcontractor or such parties is entitled to indemnity under, it would not respond if there's indemnity under any other policy. Exclusions that we would turn around and look at in terms of this policy is willful misconduct. So in the case where the insurance loss, damage or expenses are against willful misconduct of the insured, or their subcontractor agent or any of the insureds within the party. If the subcontractor subcontracts his business out to a third party, we wouldn't turn around and cover that. We would only cover the initial subcontractor policy, not any of his subcontracts. And then if they, in the case where they turn around and there's insurance cover, if they defaulted on a premium and we can show that there has been default on the premium, we would turn around and cover it. However, if the subcontractor has been refused environmental liability in the past, we would turn around and not cover these type of instances to do contingent liability on that.
Thanks, Shelley. It's very important to note then that there are very few exclusions on this policy with respect to the cleanup element of the policy.
Yeah.
And that sort of a differentiator in the market. Just one for clarity, that willful misconduct, to give an example of what willful misconduct means, is intentional dumping or release of environmental waste goods or hazardous goods in the environment. So the intention renders this policy sort of not payable. So thank you, Shelley, for that. Okay, so we've dealt with a lot with policy. I see some questions have come through on the chat and the Q&A. We will deal with those. But just getting back to sort of real life, everyday life, I'm going to ask Doug to explain or give us some examples of claims that he's seen in his experience and claims that we might be able to translate into a real experience for how this policy would respond.
Thanks, Warren. I'll actually chat about a few claims we've got operating on at the moment. The first one is a sulfuric acid tanker in KZN. It went down and most of its load spilled into the culvert that went into the stormwater drain that went into a wetland flay area. Now the challenge there is that acid emulsifies with water, blends with water, therefore rendering the whole site hazardous, and it just migrates further and further until you put a containment dam in place. Whereas hydrocarbons, oil and diesel and fuel floats on the top of water and you can skim it off the top and you've got clean water. So the challenge with this job is that we had to dig a big containment dam and we had to get rid of all the blended sulfuric acid because we neutralized it with lime, which causes reactions, but it neutralizes the chemical to be inert. But it still is deemed hazardous in that it can't be left in situ. So this particular job was about 300 kilometers from the nearest landfill site. And because we couldn't treat the chemicals on site and leave it on site as backfill material, we had to transport, I think, 30 loads, side tipper loads of waste to landfill site. So there's an example of the cleanup being maybe 250,000 Rand, but the transport and disposal, because there was extended amount of waste because we had to blend it, was about 600,000 Rands worth of transport and disposal. So, and because of the proximity to a landfill site. And then just on the subject of road tankers and road incidents. Recently, we had a full tanker load of product. We had a tanker fully laden with product, wiped down a hill in the Transkei, and it rolled a couple of times. And fortunately for the transporter and us, the insurer, there was no spillage. So it was a terrible accident, resulting in very little claim because the product stayed intact in the road tanker. And in the same week, we had a small road tanker, just a semi-rigid, driver fall asleep on a straight road, go down from 80 k's an hour down to 0, and then pop over into the culvert. And it was just the vehicle just gently popped over, so it wasn't a big crash bash accident scene. But the way that the vehicle landed, and there was some obstructions in place that actually punctured the tanker. The entire load was lost, causing a fairly big spill. So we've had 2 situations where terrible accident with no spillage and a gentle accident with lots of spillage. So there's just 2 different scenarios that can happen on scene. We've also recently worked on a maize side tipper, transporting maize to a silo, where this was quite an interesting claim in that during the offloading process, the hydraulic oil pipe burst, contaminating the maize that was offloaded onto the conveyor belt that went to the silo. And before anybody could react, the maize that was contaminated with hydraulic oil went into the silo, contaminating many tons of product. And Shelley could probably explain a bit on the technicalities of that claim, in that it wasn't really a spill from the vehicle, but it caused a lot of damage. Shell, what was the underwriting challenges that you, or the claims manager challenges that you had on that side?
Yeah, so in terms of the policy, the client did not have hazardous goods insurance in place, but he had side tank cover, standalone side tank cover in place. So because it was caused by the hydraulics of the vehicle, it was paid out, and in terms of the policy, it's covered. So yes, by the time the guy turned around and realized or reported it to everybody, the site had to be shut down. They then had to get the health and safety officers in to come and give them a health and safety prep talk. That took 2 hours. By the time they got that, they had to then get super suckers to the site. The super sucker is a massive big truck. It's a vacuum. Doug can tell you how much pressure bars it turns around and pushes through it. But the idea is to turn around and take hoses with the super sucker and physically get to the top of the silo and suck the goods out of the silo up to the maximum of what we had agreed with the goods in transit salvage guys as well. So yeah, the actual pipes were our biggest issue, in that they kept on rupturing, they kept on getting cracks in it. So we replaced numerous pipes in that side, and then also we then had to pack the decontaminated goods, the contaminated goods, into bags, which needed then to be disposed of in the correct manner.
Thanks, Shell. And then another incident that we've just worked on, that we're in the process of, was a chemical plant that had a fire, resulting in a lot of waste material and a cocktail of chemicals going to stormwater drain, when the fire department had put loads of water on it and spread the contaminants further. Residential area, therefore we had to put a containment system in place, where we had to stop all the flow of a stream, and then upstream of the contaminated area we had to divert the clean water away from the contaminated water, which was quite a process. It took a few days to divert an entire stream, about 600 or 700 meters. But during that process, we managed to save the product from migrating any further and causing harm to people and the environment further down. That scenario required lots of protective clothing for the staff and any consultants or investigators that came through, a lot of breathing apparatus, chemical suits, decontamination areas. So a site like that is a lot more challenging than for example, the fuel or diesel or just normal fuel type spillages, because of the cocktail environment where you've got a whole lot of unknown and possibly counteracting chemicals that causes dangerous vapors and gases. That particular incident, from an insurance perspective, that company's trucks were insured for pollution liability, and that was it. They did not have site cover in the event of a spillage happening. So those costs are for that company's own account, which makes for quite an interesting case. Is that what we find when we're calling on clients and in general industry, is that many companies that do have hazardous goods, dangerous goods, and either storing or using or transporting on site, don't have site cover in place. And there's an example of a company that's cost them possibly tens of millions of rands in damages, you know. And then finally, I think one more. I think that that another thing that happens that we as general public don't see a lot of, or we do in the cleanup game, is that we've got a few leaking underground tanks at the moment at fuel depots, where the stock control management system wasn't being monitored as closely as it should have, and they've had a few leaks over, let's say, 2 or 3 weeks, and lost a few thousand liters of product into the environment. And now we have to dig down, find where the product is going to, where the flow of the land is going to, and without disrupting their business at that point. And we've got to put in cleanup and rehabilitation methods in place that are non-disruptive. We obviously can do that. There's different ways of injecting bugs and that into the water and soils, and that, which is very effective. But there's an example of a company that's being negligent in the fact that they're not monitoring their own stock control of their own stock, and they've had an incident where there's been a flange or valve that's been leaking into the environment, and we were made aware, and obviously cleaning up a few of those at the moment.
Thanks, Doug. I mean, it certainly helps to talk about tangible real-life examples of claims. I'd like to go to a couple of questions that have popped up on the chat. The first one relates to back to the maize in the silo story. A question from Dialina. Was the stock in the silo first or third party property, and what happened with respect to the damage to the property?
In terms of the damage to the property, there wasn't really any damage to the silo. We didn't, because they closed down the site. The third party had decided that they would close down all the silos, not just the one silo that had been contaminated. So our cover only responded to the cleanup side of it, because it was side tank cover, only turns around and takes the cleanup. And so we turned around and cleaned up the conveyor belt. We took the product out. And then the goods in transit policy responded to the balance of the stock that was in there. So there was not a lot of third party damage. Yes, there was a little bit of business interruption, but we haven't received an approach on that. But the cleanup was where we had most of the costs came through.
Thanks. So our policy didn't respond to the damaged maize itself, really just the cleanup. The damaged maize
was part of the goods in transit policy. So the limit on this policy was actually 250,000. The claim was actually just over 300,000. We managed to assist the goods in transit underwriters in getting salvage for the mealies. And so they actually gave a portion of their debris removal back into the policy to turn around and make sure that the client wasn't out of pocket in this claim.
Thanks, Charles. Another quick one. Side tank cover. How does this cover tie in with cover provided by the motor policy, if any, in the event of an accident? Maybe this is referring to the whole trucking motor policy in which our side tank cover attaches, but maybe just a few seconds on that, please.
Yeah, so side tank cover in terms of a motor policy, where there would have to be a physical peril in order for it to respond. On our side, it doesn't have to be a peril. It doesn't have to be an accident. We would turn around and respond. Our first call of duty is to turn around and protect the environment. So we would make sure we won't call for an accident report or anything like that. And then also, I think a motor policy also sticks to their terms and conditions on their policy when it comes to wear and tear and those kind of things. As I've said, our policy will respond to the cleanup. Our first port of call is to turn around and make sure that we protect the environment.
Thanks, Charles. And then from Unri, there's a question about, let's call it consequential liability, I guess, and the onus of insurance. So the question reads, there are transporters who contract under their standard trading conditions. They exclude loss or damage, including consequential loss or damages. The carrier's liability policy will only respond to a claim against the insured should the insured be found negligent. And the example is, say, for instance, an incident occurs and hydraulic oil leaks from an excavator that is being transported. Will the policy still respond, even though the transporter has contracted out of liability and the onus is on the cargo owner to ensure that suitable insurance is in place? Obviously, a spill is a spill, and we will respond and we'll clean it up. Where does the onus for that insurance lie, with the transporter or the cargo owner, even though it may or may not be contracted in or out?
Sure. So this is quite a question. So in terms of our policy, whatever goods the client would turn around and disclose what hazardous goods he transports. If he has turned around and confirmed that he transports plant or risk equipment, and there is a leak from that, it's deemed the goods, it's triggered by a leak. So we would turn around and cover it as long as they've got that environmental liability cover in place and not just side tank cover in place. So it would respond. We're not worried if he's got the contractors or risk. We would turn around and pay out that claim because it's the goods that he is insured on his carriage.
In my mind, it's not a typical liability policy in which the insurer steps into the shoes of the contract.
No.
It's the trigger is a spill, and the
Yep.
insurer is the carrier, and those two triggers give us enough to respond to that cleanup. So it won't follow the liability. I mean, we'd be happy to sort of discuss that a little bit with you offline in person if you like, because it is an interesting point. But
yeah, and I think it'll be a nice one for our claims department to also debate. But
exactly.
Yeah, in terms of our policy, it would be triggered by a spill.
It's not a typical liability policy in that sense. And there's one more question on from Selvin. Is there a legal requirement or limit of liability for companies to comply with? So is there sort of a statutory limit that has to be bought? I presume the answer is no.
No, there isn't. At this stage, there are also the only act that turns around says, NEMA Act turns around says, if you're carrying hazardous goods, you have to have an environmental liability policy in place. They don't stipulate limits. We do find from time to time that your contract that you're busy will stipulate a limit. So in some of our policies, we have some of our vehicles that have limits of 2 million rand, and other vehicles that have a different contract that they're transporting a specific product has maybe 5 million rand limit of indemnity. So it really is at the discretion of the insured. He will also understand in terms of what he's carrying, what the exposure is with the goods that he's carrying. But in terms of the act, no, there's nothing that turns around and says you need to have a minimum requirement in terms of.
Thank you, Shelley. Now, very efficiently with 1.5 minutes to go. Quick last comments from Rob, followed by Shelley, and if there's some time, Doug and I will maybe say the very, very last word.
For me, thanks guys. I think it's been a really good session here. I think a lot's been covered. A lot of food for thought for our brokers and their clients. For me, from my side, guys, if you need to get in touch with us, you know that beautiful lady on the top left-hand screen, Angela, is at your disposal. So please reach out if you have any more questions, if you need marketing material, if you need us to engage with you and your client. You know, we've got those capabilities, and we're happy to do so. We are looking to disrupt the market here, guys. So it's an attractive time to start selling this cover, and we're looking to make deals. So come and let's talk and get some deals done and get the cover in place.
Thanks, Rob. Shell?
So we all know that South Africa has one of the most up-to-date environmental management acts in the world. So it's inevitable that at some stage your client could be exposed to an environmental liability claim. Please remember to offer both on the road and site cover when you're doing your needs analysis with your client. And don't forget to add the section onto your record of advice. In the instances where Doug was speaking about, where the client had truck on the road cover but not site cover, if his broker has not offered him that cover, I think there could be some issues there. So please don't forget to add it into your dreaded record of advice.
And then, guys, obviously iTOO is the insurer of choice for specialist liabilities. Dougie, why is Dryzer the partner of choice when it comes to the operational side of this?
I think experience. You know, Dryzer, we've been around since 1975. 4 decades strong company that's led the way in creating solutions around Africa in the oil and chemical pollution space. So when minutes matter, years of experience make all the difference.
Thanks, Doug. Right. Thank you, everybody. Thanks, Ange. Thanks, Rob. Thanks, Shells. Thank you to all of you brokers.
Thanks, everybody, for joining.
Thank you.
Thank you, guys. Have a good